Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Viewing the Australian dollar, the market hasn't pulled back and continues to push on as it just breaks above the 79-cent handle. It is assessed, although we are overbought, that the commodity-based currency should push further due to the response to the bullish case to the gold, along with the copper and also the iron ore. Now, there is a lot of weakness likely to be seen further with the US dollar as it clips or slips to the lows around 89.93 and therefore could put further risk to the strength against the other pairs. But viewing the Australian dollar, jumping to the monthly, is that we can see that now we've cleared the 79-cent handle. We can't rule out potential challenges up towards as high as 81 cents. I know that sounds like a big call, but given from the recent pullbacks, they've been shallow, especially since this rally, that the market could actually reach that target. If the dollar index, which measures the greenback strength against a basket of 6 major currencies, continues to weaken on inflationary risk, the market could see euro break above 121.85.95, and this would put projection up towards the region of 122.50.60. So do keep an eye on the dollar index, which does, as I've mentioned, measure the greenback against 6 major currencies, and with the euro weighted at 57.6, could see that risk of breaking. But let's see first how the European session challenges this topside. The dollar yen has slipped further, and closing briefly in New York under 105 has given further risk towards the downside, with the technical implications breaking down also. This puts a target of 104.15.25 and reassess. The pound is still potentially rallying to its target of 142. There has been hardly any pullback, and from the monthly you can see where the target is looking for is around that 2017 area. Looking at the dailies, we are overbought, but the trend is still strengthening. And however, the market over the last 5 trading days still maintains above that 138.30 level, which keeps the bulls intact. Now, with both legs strengthening, that is the sterling and EM, has put a little bit of a stop to this rally on the top side and therefore could see a pullback, but we do need to see a close under 147.15 to support this gravestone candle. If so, that would see a move to about 135. Gold is broken above the level of 1,800. As long as we maintain above there, then the upside could be anywhere towards 25 or 1,855 due to the given technical implications. Let's see if we can sustain the break from last night. Finishing off, well, the market seems to have found the upstart in oil due to the Arctic snap. So let's see if the market can push on. We've got to run into the monthly charts to get an assessment. Now, I am seeing $65 a barrel, but that could all change if we do see a slide underneath $59.30. It doesn't look low though at the moment, but bearish divergence is evident. So let's see whether or not the market does snap back to the downside, which is favorable. Well, that wraps it for today. Thank you very much for joining me. And as always, I've been Intraday Report. I hope you enjoy the great start to the day.